It's settled. You've got some money saved up for a down payment and you're ready to start your home buying journey. You've done your online research and have pretty much narrowed down the neighborhoods you're interested in. You can't wait to go house hunting. But wait, do you find a reputable real estate agent first? Or do you connect with a lender before you look? Hey everyone, it's your favorite local realtor, Adam Brunelle. It's so nice to see you all again. I want to start off today's video by saying a big thank you to everyone who wished me a happy birthday this past Friday. Between all of my social medias, texts, phone calls, and emails, 122 people reached out to me, and I can't tell you how loved that made me feel. I am truly blessed to have each and every one of you in my life. In today's video, I'll be going over how your lender and realtor work together. So let's get started, shall we? So, which came first, the chicken or the egg? It's common for house hunters to sometimes think that real estate agents are the mortgage company gatekeepers. Frequently, they have a list of trusted lenders they work with. Some may even have a loan officer right in their real estate company's facility. While it seems convenient and maybe even logical to work with a realtor first, it's important to do your own research ahead of time. You'll want to understand how much you can afford and what your monthly payment you'd be comfortable with before you get too attached to a home that might be well out of your reach. You'll also want to talk about home loan closing costs and other fees. Those can eat into your savings, and you've earmarked for your down payment indicate that your house hunting plans may be a little premature. Getting pre-approved by a lender is the most reliable way to understand your house buying budget before stepping foot in an open house. Many realtors and lenders have co-marketing agreements. They spend money to market themselves as partners, bring each other business, and rely on the services of the other to give them an edge over the competition. Makes total sense, doesn't it? But when less than reputable realtors and lenders work together like this, things can get a little fuzzy. The Real Estate Settlement Procedures Act, also known as RESPA, is part of a federal law that governs independencies between realtors and mortgage companies. It expressly prohibits agents from receiving anything of value from a mortgage professional in the exchange for the referral of business. Additionally, the law cites that a home buyer can't be forced to use a lender working with a particular realtor. So if you feel pressured into choosing a lender just because of a realtor referral, you might consider walking away. That being said, ask around. Talk to people who have bought homes in the area you're looking to move to, and seek out referrals from them. A partnership between a realtor and a loan officer can sometimes be the best of both worlds. You know, kind of like Batman and Robin, or Frodo and Sam, or Woody and Buzz. If both are dedicated to the community that they serve, if they live in the neighborhood, you're most likely going to get excellent service. These professionals live by referrals. If you like working with them, you'll tell a friend, and so on and so on. By all means, don't discount the power of the relationships between a realtor and a lender. Find a no-pressure loan officer to work with. My advice is to start by finding a non-pressure lender or loan officer and work on getting pre-approved. Not just pre-qualified, there is a difference, before you start down the road with a realtor. Keep in mind, though, that real estate agents are salespeople at heart. And while they are certainly a valuable asset when it comes to finding you the right neighborhood, honing in on what could be your dream home, uncovering the best value, and negotiating contracts, they're not financial experts. It's up to you to understand your budget and the benefits in terms of different loan products. Also, it's to your advantage to research the best mortgage rates, which could save you tens of thousands of dollars in interest over the life of your loan. Watch for home financing myths. Unfortunately, there are some general home financing misconceptions out there that can influence first-time homebuyers to bypass the research phase and dive right into the more fun activities of house hunting. Some of these misconceptions include applying with more than one lender will sink your credit score. While it's true that multiple hits on your credit can lower your score, not all inquiries are created equal. FICO allows for rate shopping by counting all similar inquiries made within the same 30-day period as a single inquiry. This means you can visit as many lenders as you'd like, as long as it all happens within 30 calendar days. There's no rush. Rates are the same everywhere. Like with any financial product, a lender might decide that they want to be a market leader for a particular loan type. If that's the case, there's a good chance you'll find competitive rates when you shop around. But even when rates are comparable from lender to lender, weigh the level of service offered. Is the loan officer attentive? Do they repeatedly ask for the same documents? Are deadlines and other milestones being missed? That rate is too good to be true. For a time, there was a dark cloud that hung over the home financing industry called the bait and switch, where a borrower was lured in with an amazingly low rate, only to be pressed to agree to one that's not so hot. If that happens, contact the Consumer Financial Protection Bureau to file a complaint. Because complaints are available for public viewing, reputable lenders aren't going to risk the bad press. Pre-approvals from unknown lenders don't count. Wrong. But pre-approvals with underwritten backing count more. All mortgage companies are held to national and state level licensing requirements that are even more stringent since the housing crisis of a decade ago. And it's relatively easy for you or a seller to verify the licensing status of any company you want to work with. So, are you ready to get started? Now that you understand what the relationship between your realtor and loan officer is, you can make an educated decision on how to proceed. Of course, it's totally okay to trust the referral of a realtor, but you should also do your own homework to make sure you're getting the best deal. Well guys, I hope you enjoyed today's video. If you liked it, be the cool guy or girl and give it a thumbs up. As always, if you have any questions, leave them in the comment section down below and I'll make sure I get back to you. Have a great rest of your day and I'll see you soon. Bye-bye.